Hello guys, welcome to my channel. This is Hakman Traders. In this video I am going to be showing you how to trade a volatile market. Now in the previous video I've explained to you what is a volatile market, what is volatility and how it works. So in this video I'm going to be showing you how to trade in those volatile markets, how to trade in that type of situation, in the curves and the ups and downs. So let's get started. Now as you can see over here, let me load this. Now in a volatile market, volatility is something that I've showed to you in the previous video, that an increase and decrease, arise and fall of of the market by 1% in a specific period of time is volatility. Now to know this, I'm just showing this to you as an example. So if you consider this area right here, you can see that this was a resistance level. So it was a great area to sell out, to short your position over here. Now if you consider this area, this was a good buy, because if you've invested in these areas you wouldn't know how down the market would come. But again it formed a support level, and now as it rose to this level and came down, it formed a resistance level at this area. So these two you can now use as your support and resistance level, and from these areas you can trade the market. Now as you knew how far the market would come down, and if you've invested, let's say if you've invested entered into the market over here, so at this candlestick, so if you moved along and sell out, or you will also make a profit. But if you didn't know, you are nervous about investing in this area, so let's say it formed its resistance level, you short your position, came down, and then from this area you entered into the market. You knew that this market would rise from its support level, and you entered into the market from this area and move along the trend and do and sell your stock over here, and then apply the same method. This time it broke the trend line and moved upward, but now we're seeing a much bigger resistance level. So if it broke this level as well, now this area would act as a support level. Let me turn it green. Now this area would act as a support level for this. I'll remove this, because we're talking about this area. So this trend line, this green trend line and the red trend line, this green trend line is now acting as a support level, and this now as a resistance level. Now if the stock reaches to this level and starts to turn over, short your position. But if the stock reaches to this level and move upward, let me draw it. If the stock moves like this and then start to decrease like this, so then short your position from this level, and as it comes down to over here, long your position at these levels. Before you long your position and before you short your position, always do your risk management properly. So in my case, this should be my risk management for my short position, and this for my long position. It depends totally upon you, what is your risk management, what loss limit you want to give to your stock. So this totally depends upon you, how much risk you can bear. It all depends upon that phase, how much risk you are willing to take. So this is the entry point. Now what about, let me remove these. Now what about in a low volatile market, as the market is moving slowly in that phase? So how would you trade in those markets? So volatile market also shown in this section. Now in case, as compared to, if you compare this to that area to this one, so this was more volatile, this was moving more like its movement was far away from each other, so it would give you much more profit than this area, than the low volatile market. Now in a low volatile market I would not buy and long my positions, because in a low volatile market I would enter into a trade and hold that stock. As it moved further, I would hold, because if I sell my stocks for a short profits, for like a small amount of profits, then that would not be profit, because I would also have to pay the broker. He would also have to charge me for he also have to charge me, and besides that I would also have to pay the tax to the government, because those are also. So why I would uh, buy and sell in this? If I buy in this area and sell, how much profit would it be? If I let's say if my profit here is 200 rupees, like let's say if it's $5, so I will also have to pay the broker. Consider that $1, and how much would I pay to how much would I pay in tax? So that's also, you will also have to count these factors here as well, because these also matter to because small amounts matter too much. So you will have to keep this in mind while you're trading in a volatile market. Always plan, always plan before you invest in a volatile market. Observe the market how it performs, and you should also reduce your position size. If you're investing $15,000 here, so invest $7,000 here, because it's a volatile market. Who knows what happens? If the if you enter into the market here, then this also, if you save that money for this area, if you've invested $7,000 here and then seven over here, so then you've made a great plan of investing and made a huge profit. And also do your risk management and do more what works. So that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.